With the Fed now coming out and suggesting that they're going to go into a mild recession, what could this actually mean for assets like crypto and Bitcoin, which are risk-on assets really? In this video, I'm going to deep dive into what's happening in the crypto market right now, how far along in this bear market are we, and how we should prepare for the next bull run. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, it has been a while since I made a crypto video on this channel, and the reason for it is because you guys don't really want to know about crypto while we're in the depths of the bear market. It's not great to see your portfolio keep dropping every single time. However, everything plays out in cycles. Now it's getting to a very important stage of the bear market, which I think is time for you to start paying attention. What we're going to go through is a few graphs as well as some technical analysis. So if you are new to the channel, definitely subscribe. Now, yes, I do talk about real estate most of the time. Occasionally I'll drop some crypto videos as well as some trading card videos. So bear with me as we navigate through this bear market. You see what I did there? Yeah. Now what we can see here is the fear and greed index, and at the moment with the recent pullback we're seeing today, we're at 52, which is basically neutral. What we have seen is greed as high as 68, and this goes all the way up to 100. And if we were to look at what's happened over time, we can see that we've been in this sort of range for a while. Even if we go back 3 months, we've been in that greedy / neutral stage. But if we go back a whole year, we've come out of periods where it was extreme fear. Levels of 10 to 14. We also saw late last year of 20, 25, 26. And then we've seen that recent liftoff as we've seen prices increase as well. So a lot of people are getting a lot greedier now than they were a couple of months ago. And this directly correlates with price as well. So let's have a look at that. Now, as of today, the market's coming in at about 1.2 trillion, and we can see Bitcoin is just below 29,000 USD. Now, what's interesting is that we have seen prices for Bitcoin increase quite rapidly over the last, say, 4 or 5 months. And on the 1 year view, you can see a year ago, we were at 41,000. So yes, when you look at someone going and getting greedy at 28 when a year ago we were at 41, you're like, what are you thinking? And that's because in January we were trading at about 16,000 and a low was at about 15,000 in around December of last year. So since then we've had almost 100% move up to about $30,000, and now we're starting to correct. So what does this all mean? I'm going to break it down for you in a second. We can see that most altcoins are down as well today. All these numbers are represented in their USD value. What you want to see is your altcoin versus your Bitcoin. Because the whole idea is, how do you get as much Bitcoin in terms of value, not so much the USD value. Now, why it's important to pay attention is because I think we're entering the next phase of this bear market. I don't think we're in a bull market. I think everyone on Twitter is going crazy saying alt season, everything's going up. It definitely doesn't feel like what it was in 2021, and that's because we're in 2023. And usually, if you're looking at 4-year cycles, 2023 is usually the bear market lows where you accumulate, you move sideways, chop and change, but it's really after the halving year, being 2024 in this case, which was 2020 in the last cycle, is when we start seeing some decent returns and significant upside. So we're still about 12 months away from the halving cycle. And if this cycle is to play out like last time, then we should expect to see some sort of correction later in this year on Bitcoin, but we could well see lower lows on most altcoins. Now, a trader that I do follow is Trader XO. You can definitely go check out his profile on Twitter. But what he's suggesting is that BTC is now back under its 2021 yearly open and resting at the 0.75 of the range. All that means is that basically he's gone out and taken out a range, which is the high over here and the bottom of the range, and then this would be 50%, this is 75, and this is then 25%. Now, if we look at these numbers, what he's suggesting based on his other analysis is that we're pretty much going to test the top of this range, and then we're going to make our way all the way back down, and most likely come and retest whatever this range low looked like in January of this year. Now, this is just looking at Bitcoin, and we're going to spend some time on Bitcoin, and then we're going to move to the alts, which is where a lot of you guys are going and speculating, but we're going to definitely touch on that in a little bit. What I've got here is the chart of BTC against USD value, and I've got the 2018 cycle as well as the 2022 cycle as well. Now, it is very important we pay attention to what is playing out right now, and you make up your own mind whether you want to invest now or whether you want to wait on the sidelines because you think better opportunities are coming. So what we can see here is 2018 blow off top, and then we had a bear market year, which was ending in 2018. By the time we came into 2019, we started blasting off again. Sounds very familiar, and that's because we come here in 2021, we come all the way down during bear market year, we bottom out at the end of 2022, and then we start lifting off again in 2023. So 4 years, 2023 minus 4 years equals 2019. So that's effectively where we're at right now. What we ended up seeing was a huge move up, only for us to then go and correct. Now, what we can see is that this here in March 2020 was in fact the pandemic low. We had a lot of uncertainty, so who knows what's going to play out this time. I have a few thoughts around that, so be sure to keep watching. upswing. But what we did see is Bitcoin didn't come back and revisit these lows. Although it did come back quite low, it definitely did not come back and revisit these numbers here. Now, could this cycle repeat? Possibly. It usually rhymes, it doesn't repeat exactly the same. But if we fast forward to what we see now, is we've gone from 15.5K all the way up to about 30,000. Now we're starting to correct. If we play out this exact same scenario, or we play out something that's very closely linked to this, we could expect to see a revisiting of the range lows by the second half of 2023. And what I'm going to do here is just look at basically taking this bar pattern here and seeing what that means for us if we were to overlay this. Again, everything is going to play out differently. They will rhyme though. And what we can see is that if this pattern is to play out exactly the same, we could see the highs of about 56,000. Again, I don't think we're going that high, but then we could see us correct all the way back to about 16 to 17,000. Now, if this were to happen, we could see that correction come in at around Feb of 2024, which would be just before the halving, which is anticipated to be in April or in May 2024. Now, I don't think this is actually going to play out the exact same way, but what I do expect is for us to come back and revisit those range lows. Could we go as low as 15K or 16K? I'm not sure. But anything under 20K, I think is a fantastic opportunity. Of course, I don't give you any sort of financial advice, especially on something as risky as crypto. So definitely go and use your own risk management before you go in and make those decisions. Now, the other point that's very important in all of this is that we're looking at the Bitcoin chart. What you'll find is that although Bitcoin never came back to revisit those lows, and despite that pandemic drop, we still didn't revisit those bear market lows, altcoins were a different story. Most of these altcoins, they went much lower than whatever their bear market lows actually were. You had a lot of coins drop by 20 or 30% lower than those bear market lows, which is why you see dominance during this time for Bitcoin increase, because a lot of money flows out from altcoins and goes into Bitcoin as a store of safety. But during this period of time, we could see the Bitcoin price drop as well as dominance go up. And that would mark the final stage of this bear market. Now, I'm not going to come out here and pretend like I am an expert at crypto, but the truth is I do enjoy this stuff, and that's why I keep teaching myself and learning as I go. I don't want to make the same mistakes I made in 2018 and 19, and I definitely want to be taking a lot more profits up on the next cycle. That's why you'll often hear a strategy of DCAing into the market, so dollar cost averaging into the market. And the one way that you could do that, if you're in Australia, you could go and set that up with CoinSpot. I'll have a link in the description below. Gets you about $10 free Bitcoin, but essentially setting up a recurring buy. And what this means is that you're going in and you're allocating a certain amount that gets bought up at a specific period of time. So frequency could be weekly, could be monthly. And what you do is you have a certain amount, a dollar figure that keeps on buying certain altcoins or a certain amount of Bitcoin. And what you can do is you could have this on a set and forget. In this case, it would be $1,000 worth of Bitcoin on a weekly schedule starting on a particular date. And you just have this going and accumulating in the background. You eliminate all of the white noise. And this is one way to go and build up your positions while you're doing your 9 to 5 or building your own business, because it's very important that these things don't take over your entire life. At the end of the day, yes, investing is fun. Yes, investing is great to make money, but it's also super risky. And you don't want to go out there and invest all of your active time for something that should be quite passive. Unless you're an actual day trader, then that's a different story. I don't claim to be a day trader. I go and focus on the buyer's agency for Search Property, help you guys with real estate, make some real estate videos, but occasionally I will dabble into crypto and I go and build out my positions for a long-term hold. With a massive correlation between the stock market and crypto, I can definitely see some retracements in stock market, especially with an expected recession in 2023. So this could definitely pull down all of these altcoins as well as Bitcoin to those range lows that we've been talking about. This is where I'm going to get really excited, picking up whatever I can just before we go on to the next run. And I don't want to be left behind by simply looking at charts and thinking, oh, that's what's going to play out. Chances are it might not. And that's why I want to accumulate what I can. But in the meantime, I'm looking at those prices and I'm looking at what I can accumulate over the next 6 to 12 months. I hope you guys have enjoyed this video. If you have, smash that like button, subscribe if you haven't already, and I'll catch you guys in the next one. Thanks, guys.